not really sure what kind of unit I want. I might live with a roommate, I might not. So I'm kind of looking for a 1 bedroom or 2 bedroom or 3 bedroom. I don't really know.
Right.
And then they give you a quote for all those different floor plans. And now I can record that data into a central area and compare and contrast it to our property.
I'm Drew Breneman, and this is the Rise and Invest podcast. I bought my first 2 properties as a 19-year-old with my own money that I earned from an online business I started in high school. I've now grown my portfolio from that first duplex to hundreds of millions of dollars of investment property. My goal with this show is to give you the resource I wanted when I first started out. Subscribe to our podcast where I break down real-life stories, tactics, strategies, and current market information you need to be a successful investor. So let's jump to how we use our database then, or?
Yeah, let's do it. So, an endeavor that I had, joining Rise Invest is that I wanted to make sure that when we underwrite a deal, we have to do everything that's possible to make sure that that information is not lost. Because when you're really, trying to study a market, it's almost like, a network effect where, let's say, the value of Facebook or Twitter goes up as more users use it. Well, our understanding of the market goes up as we underwrite more deals.
Yeah.
But the problem is that a lot of the time, you make a model and it's a good model, but it gets saved down in a folder, and then that information doesn't go to a central database and it's kind of lost forever. And maybe I have a good pulse on the market, but can I tell you the last, the average stabilized cap rate of the last 5 deals I underwrote, or the last 10 1970s vintage value add deals that I've been looking at? Probably not. I mean, you're going to forget that information. It's going to be lost. So, one thing that I wanted to do was build a central database that stores all this information. And it's something that's, incredibly valuable because, one, it allows us to track our pipeline and, make sure that we're underwriting deals consistently. Whereas, most shops, investment shops, they don't have something like this. So they underwrite a deal and then that information just kind of gets lost forever, or it's just, shoved. Yeah, just buried
somewhere. Yeah.
Buried in a folder. So, one thing that I instilled into our underwriting model is it's literally, 20 to 30 lines of VBA code where essentially you click a button and then it calls for another Excel file to open up. And then from our underwriting model, 900 variables will transfer over seamlessly to this central database. And now that information is all stored somewhere. So, let's say, over this past year, we've underwritten, hundreds of deals. I can look back to, things like locational data, vintage, who the broker was, what return data was, the basis at which, I was buying the property in terms of stabilized cap rate or price per unit, price per square foot. I can make sure that I'm underwriting deals consistently in terms of what I'm inputting for payroll expenses and contract services and utilities and all of this, it helps us to manage a pipeline because we can go into the database and we can see all of the active deals that are currently on the market, or something that we're taking a look at, and we can make sure that a model doesn't get buried, or we're not forgetting something. And 2, it really helps us to discern what makes for a good risk adjusted investment, because something that we all like to throw out there is like a stabilized cap rate, and that seems to be kind of like the universal metric that people like to look to in terms of evaluating an opportunity, whereby I just take my stabilized pro forma, stabilized rent, other income items minus my operating expenses, divided by my all-in basis in terms of purchase price, any renovation costs. So, when I have information on, let's say, 30 deals that were, 1970s, 1980s, 1990s vintage type property, where we're doing a renovation program, I can look to the database and see which opportunity is the most attractive. And that helps us, with our decision making in terms of what we need to prioritize.
Right. And again, earlier I was talking about, being confident with your decisions. And this is another tool that makes that very easy to spot a good deal, where if you've been underwriting a deal in a market and every deal stabilizes to, let's just make up a number, to a 5.0 cap rate once you have it stabilized, and then you see one that comes through and it's a 5.5 now, like that's just obviously a good deal.
Yeah.
Like, jump on it.
Yeah.
And then what's nice too with the database, you touched on it, where also it's easy to see if we're doing things consistently, because it's all just set up in columns. So then you would say, okay, this is a 5.5 cap. I really like it. Then let's compare that with the other ones, which you did already, to like the cap rate. But then look at what you assumed. Maybe the reason it's a 5.5 cap is you accidentally, you did the T12 payroll number, but it was $500 a unit cheaper than all the other ones you underwrote.
Yeah.
And then you look at that and go, actually, wait a second, I need to change that. Where at most everyone else is underwriting a deal, that's just all the information that's siloed in the deal underwriting file. You would never have a way to compare and go, oh, actually I underwrote more, other than just opening them all up and manually doing this, which is how we kind of got going on the database as we were buying the deal. And I was manually making that. And you were thinking, this is something I've always wanted to make. Let's just make it.
Yeah.
But I made basically a manual version of this, just by referencing the things one by one, not 900 variables, obviously, but 20 maybe. And then we could compare, apples to apples. Is this actually, underwritten the same way as the other ones? And then that we realized this is a tool that if we could automate and then kind of expand on, would be really valuable.
Yeah, exactly. And, just like you said, when, you create something like that manually, and, I did this at my old job too, where you have to go into a folder and no one knows where like the final underwriting was or what it was saved down to, in terms of like the file name. And I have to open, say, 3 or 4 different models and then, transcribe that data over to another Excel file. And all of a sudden you're spending hours, manually transcribing data when you could have something that does it automatically. And the thing too is that, there are a lot of software and platforms that actually do something like this for their clients, where they can submit a model and then it transcribes all the data so it's in a central place. But the difference with ours compared to others, if we're using, say, a third-party platform, I need to actually go through the process of uploading my model, which takes time. I need to go to the website or wherever. I need to find the exact file, and I need to upload it, wait for that uploading to occur. And then I need to talk to a representative at that third-party platform and ask them to organize it in a way where these are the metrics we really look to. We want our platform to be organized like this. For us, that transfer of data happens seamlessly through just the click of a button. And then all the customization from thereafter, we can just do through Excel. So if I want to create a custom report, I can just do that and then reference the raw data that comes through the model, and it becomes really valuable.
Right. Yeah. I had demoed software where it would basically do this for you, but then, yeah, you could have a model upload feature, but then it's like that's mapped just to what you have. If you change the location of any number, now they need to remap it, or you're manually submitting stuff to the website. And I remember doing the demo thinking I would need to hire someone just for inputting data at this point.
Yeah.
Like it seemed like it would take a long time to get the data on this. And then obviously then at that point now it's on someone else's system. So then now you're sort of beholden to whatever those costs are, and it's whatever the platform is. Maybe you can't filter it the way you want, where, Excel, I mean, that's so powerful. You can filter it any which way, and it's all sitting there as, the values basically that we, own and control. So it's nice.
Yeah. And it's 30 lines of VBA code, and we have our own proprietary database system that I don't think anyone else can say they have.
Yeah. And that's been actually it's interesting. It's turning into almost like a sales thing almost, in a way where we explain that to potential investors and they get really really interested in seeing what do you mean, and we could say, in this made up example I have where the deal stabilizes at a 5.5 cap, we can then use the database to say, hey, here's the other 10 deals we were talking about we underwrote that were all 5.0 cap rates. Here that is compared to it, and they could look across and go, yeah, these are underwritten the same. This one's jumping off the page as a good deal, whereas otherwise they have no context, or we would have to send them 11 different deal models and let them kind of flip through and go, oh, okay, yeah, this is a higher cap rate than these other 10 spreadsheets they sent me.
Yeah.
So yeah, that's been a really great tool and something we'll continue to rely on heavily and use. So kudos to you for making it and improving it.
Yeah, thank you.
Download our 100+ page passive investing guidebook today at riseinvest.com/downloads. Accredited investors can sign up for our multifamily investment opportunities by hitting the Invest Now button on our website. Now back to the show. Great. And I think probably last thing to get to is, talking about how to figure out, rent comps, let's say. So one of the biggest pieces, and especially in today's market where rental rates have gone up a lot in so many areas, a lot of buildings, you're buying it and the lease, maybe it was signed like a year ago and prices have changed. And even in, it could be moving in other times, the rents could be going down, or one thing so it's, to me, one of the most important variables that you're need to figure out in your model is going to be, what are the rents going to be, once you're the owner. So I think that would make sense to close with, this is more basic potentially, but it's worth talking about because there's no, this isn't some fancy feature in something or something. This is more something you're finding on your own, as the person underwriting it, where we were talking about the stuff you're given a trailing financials, you're given the current rents. But one of the things you need to figure out and find is, what are the new rents going to be? Yeah. So what are some ways we're doing that?
Yeah. And I mean, just to add to that, the rent data that comes through the rent roll that we integrate into our model, that's not end all be all, right? There might be an obvious trend that you can visualize, whereby, the rents, say that were signed in this month are 10% greater than the rents that were signed 6 months ago. But just because I have the rental rate data from this given month, that doesn't mean that's necessarily what market rents should be. Depending on who the property manager is or who the current owner is, it might be just a high net worth investor who wants to operate the property for occupancy and cash flow, and they don't really, they're not very, vigilant in terms of how the rents are growing. So, one of the tools that we utilize, and, we reference a third-party data provider called Yardi Matrix, whereby I can look to the specific address or find the property that I'm evaluating right now, and I can search for similar properties within a certain vicinity of our property, say 3-mile radius, or, if it's Phoenix, I'm backed up against the mountain, then I'll just look, 3 miles to the north or something like that, and search for, property size, vintage, location, and I can export that data. And we built what we call the Yardi Rent Regression, where we import the data from Yardi into this model, and we end up just clicking a button, and it cleans and sorts the data in a way where we can easily discern what the comps should be. So when we do clean up the data, it goes through a regression model, and it shows, on an XY axis, what's the square footage of a particular unit, what's the rent for that particular unit. Let's run it through a regression line, and then also organize the data to understand, this is the vintage of this property, this is the rent, this is the rent per square foot, this is the unit type, whether it's a 1x1 or a 2x1 or a 2x2. That's an essential component for us identifying what the comps actually are, because that's actually a problem in and of itself, is just identifying which properties am I competing against. When I look to market rent, what are the properties that I should reference in terms of, setting my basis for what I think market rent should be for our property that we're evaluating. So yeah, that's all to say, it's a tool that allows us to evaluate which property should be the rents. And then we dig even deeper by adding our own like human observation to that by actually what we call just shopping the comps or ghost shopping, um, where we will do a combination of going to that property's website and identifying which units are being listed for what kind of rent, calling the actual property manager and getting quoted. We're calling as if we were actually moving into the area, saying like, "Hey, I'm moving to Phoenix or I'm moving to Chicago, and I not really sure what kind of unit I want. I might live with a roommate, I might not. So I'm kind of looking for a 1 bedroom or 2 bedroom or 3 bedroom. I don't really know."
Right.
And then they give you a quote for all those different floor plans. And now I can record that data into a central area and compare and contrast it to our property. And then, we also pair that with actually going in person to tour the property itself and making sure, from a location standpoint, from, a finishes standpoint, should we deviate our assumptions one way or another based on a variety of factors and actually touring the property in person. Because real estate, we like to it's something that's done physically. You got to go in person to actually see it. You can't just do real estate through a computer screen. So that's something that we do a lot when we're evaluating these
Right.
opportunities.
Yeah, because I think kind of early, the first place I ever worked, that was one of the things we had the interns doing. They were just manually like looking around on the internet for what would be a comp, So then they would call. And so what's interesting with using the rent regression is it shows what are the similar properties, and however you want to categorize that, in terms of the rent, per foot or whatever you want to look at, and kind of fine tunes what you should be calling. If you have a property that's 5 years old and charging $1,500 for 2 beds, there's no reason to be looking at the place charging $900 for older units. It's not a comp. Whereas in the doing it without that step, you would go to the website or whatever for that property, and then you'd realize, okay, this isn't a comp, and then you're, it's definitely a lot slower. Where Yardi, they have a list of all the buildings, so and then can pull it. Yeah, because and then when you're talking about going in person, just want to clarify that. I mean, anytime we're getting close to buying any deal, we are going to the competing rental properties to the one we're looking at buying, and we're going as renters, and showing and doing the same thing we were talking about doing on the phone there, but in person as potential renters, just to make that clear. Because when we say going to the property, maybe if you heard that, you thought that meant, we go tour the building we're going to buy. Obviously we do that, but then as part of that is then we go, and we do this always on the same, basically like a trip is, then we go to the ones we identified as comps, and then it's just real sort of seamless for us. Where then, okay, we're going to go to the other buildings, and we're just say what you're saying. We're looking for 1 beds, maybe 2. I'm not sure. Maybe we'll both move. I don't know. We don't have much of a plan. Sorry. Let's just see what you got. And
Yeah.
give me all your marketing materials if you could. And then that they so then that, because also things change where they might not have updated their website, or you call and they're kind of they give you just some of the info, but you go in person, get a real tour. I remember one of these deals I was shopping in Texas just as a potential renter. This gal was talking to me about the single family home market for like 20 minutes, where you just get like a lot of color, that you wouldn't have got just over the phone. She was really struggling buying a house, just in terms of it's so competitive.
Yeah.
Where she was at like a $400,000 price point in Dallas, and it's just every deal's got like 20 offers. Within this, you can ask about that, or you get, and then so I was able to get a lot of info on the building and that particular area. Even what she thought of the company she worked at, which could be a management company we might hire for something. So it was, you get a lot from going in person. So that's a big takeaway. So great. Well, yeah, appreciate running through all this, Evan. I mean, nice job with everything describing it. I know some of this is kind of in the weeds and a bit complicated, so hopefully it all made sense for everybody. But I think that's a good spot to stop. So
cool. Yeah, it was fun being back on and describing all the tools that we use to underwrite. And it's worked so far, and we've been successful. and hopefully more good things on the way in terms of our analytical infrastructure.
Yeah, we're always working to try to improve things or come up with new things we can also use. And I mean, this is one thing too that sort of, it helps reduce risk and sort of kind of see where the opportunities are. So I mean, some of this, if it's, especially as you get into these larger deals, you got to, as you were talking about earlier, is to find ways to save time and streamline things. So this is, hopefully there's some takeaways for everybody in this, whether you're buying a large buildings or, on over to just like a single family house. I mean, there's stuff you can take away at any deal size, I feel like. So yeah, nice job with this. So,
yeah. Thank you.
Great. Well, yeah, until next time, everyone, thanks for joining us, and we'll see you on the next episode. Thanks for joining us on the Rise and Invest podcast. Please be sure to hit that subscribe button on YouTube or wherever you enjoy your podcasts. If you'd like to dive even deeper into real estate investing, check out our company's website, riseinvest.com, where we have numerous free resources and information that can help both active and passive real estate investors. Our 100+ page passive investing guidebook, our trends report, and our blog are all available on our website. If you are an accredited investor, you can get started today as a passive investor in our multifamily investment opportunities by hitting the Invest Now button on our website.
The views and opinions expressed in this podcast are those of Drew Breneman and guests as of the date of recording and do not purport to reflect the views or opinions of Rise Invest Holdings LLC and its subsidiaries. The views and opinions are provided for informational purposes only and should not be relied upon or deemed as investment or tax advice or an offer to buy or sell securities, and the speaker cannot be held responsible for any direct or incidental loss incurred by applying any of the information offered.